The purpose of this video is to answer the question, how many loan modifications can you have over the life of your loan? And I'm also going to just speak briefly about a particular denial reason that some people are experiencing when they're trying to transition off of their COVID forbearance plans that's kind of related to this question. If you're a subscriber to my page, welcome back. It's good to see you. If not, make sure you subscribe, like my videos below. Always feel free to leave me a comment or a question. I love hearing from you guys, and I do try to get back to everyone as soon as possible. So something I hear a lot is, how many loan modifications can I have? If you are somebody who's experienced multiple periods of financial hardship and you've already had a loan modification, you might be wondering if you can have another one. And the general answer to that is, it depends on who your investor is and what their guidelines are. As an example, let's say that you have the VA, the Veterans Administration, as the investor on your loan. They have limited loan modifications to 3 loan modifications over the life of the loan. The VA also has said that there are kind of 2 other things that might prevent you from getting multiple loan modifications. One of them being, there needs to be 3 years between each loan modification. So if you get a loan modification and then a year later you experience financial hardship again and you default again and you need another loan modification, but 3 years have not passed, they probably won't give you one, or they reserve the right to deny you. The other thing they've said is that once you take out a VA mortgage, 12 months need to pass between when you take that mortgage out and when you miss your first payment in order to be reviewed for a loan modification. So that's just kind of an example about how those rules are dictated. So if you're wondering how many loan modifications you should have, you want to find out who your investor is and then kind of what your particular investor dictates. If you, the big 5 government investors, as a reminder, are Fannie Mae, Freddie Mac, FHA, VA, USDA, okay? If you have one of them, likely you can have up to 3 loan modifications. That's generally the case across the board. Again, each investor does things a little bit differently. If you have Fannie Mae or Freddie Mac and you're dealing with a flex modification, which is the name for one of their modification programs, you cannot get reviewed for another flex mod if you have defaulted or missed more than 2 payments within 12 months of getting your first flex mod. So if you get offered and you accept a flex modification from your bank, 12 months need to pass before you can be reviewed for another flex modification. So if you default a couple of months after you take a flex modification, that would be one specific reason that the bank would deny you. Another thing important with the flex modification, multiple modification questions, is if you fail out of your trial payment plan, meaning when Fannie Mae or Freddie Mac approves you for a modification, they have you make three months worth of payments as a trial to make sure that you can afford the payments. After those 3 months, then they will make your modification permanent. If you have more questions about trial payment plans or that process, watch those videos. But for purposes of this video, if they've given you a trial payment plan telling you you're approved, you just have to make these 3 payments for 3 months to test the income, and you don't make it through the 3 months, you fail out of the trial, you have to wait 12 months before you can be reviewed for the flex modification program again. So overall, you can have as many modifications as are allowed by your investor, but you have to figure out who your investor is and kind of what their guidelines say. And I just kind of went over 2 of the main examples. The last thing I wanted to communicate is what's happening with these denial reasons related to COVID. So if you're a borrower who was current on your mortgage prior to, if you were current on your mortgage before March 1st, 2020, meaning you were making payments fine, the pandemic hit, March 1st, 2020 happened, and then you took a COVID forbearance plan, and you have one of these government-backed investors, again, FHA, Freddie Mac, Fannie Mae, VA, USDA, if all of that applies to you, your lender cannot refuse to give you a COVID transition plan because you've exceeded the number of modifications already. So that's really complicated. Let me make sure I break that down. Let's say you have a Fannie Mae loan and before COVID happened, you already had 3 loan modifications, okay? You're current, you're making payments, all is well. March 1st, 2020, you default because of the pandemic and you immediately take a COVID forbearance plan. At this point in the process, if you're trying to transition off of that plan, the lender cannot tell you, you can't have one because you already had 3 loan modifications. That is not a valid reason for denial. They still have to offer you one of the COVID transition plans, like a payment deferral or a loan modification, since you're technically a protected COVID borrower. If you were in default before March 1st, 2020, or you did not take a COVID forbearance plan, you're not protected. But if you meet those specific requirements and you happen to have exceeded your number of modifications before, that is not a valid reason to deny you. So if that's happening to you, you need to find an attorney in your state or work to appeal the denial using the specific language in the CARES Act that protects you. Good luck.